Are you prepared for the upcoming financial shifts?
That's what our top analysts are here to discuss. Danielle DiMartino Booth, noted economist and founder of Quill Intelligence, kicks us off.
With AI-powered summaries, we distill hours of vital analysis into just minutes, saving you time while keeping you informed.
So buckle up. Let's hear from Jaime Diamond as he discusses the pressures in the bond market.
And don't go anywhere. George Gammon and others will drop more insights on your investment strategies.
Remember, this content is for educational purposes only and not investment advice.
Today, we're breaking down the latest FOMC Minutes with insights from Danielle DiMartino Booth.
Danielle highlights how recent Federal Reserve actions can shape the economic landscape and investor strategies.
Danielle DiMartino Booth asserts that the Federal Reserve's cautious stance reflects a careful balancing act.
She emphasizes that managing inflation while fostering economic growth is crucial for policymakers.
What strategies does Danielle highlight for inflation management?
Danielle points out that the FOMC is focusing on maintaining inflation stability amid rising prices. Danielle discusses how interest rate decisions affect different sectors of the economy.
She warns that higher interest rates may create challenges for borrowers. What does Danielle predict regarding future monetary policy?
Danielle anticipates that future economic reports will influence the FOMC's approach to interest rates.
Danielle emphasizes the importance for investors to analyze market data alongside the FOMC's decisions.
She advises that policymakers ought to remain flexible and responsive to evolving economic circumstances.
Today, we're reviewing economic insights in the context of equity markets.
Experts discuss how economic data, specifically around Treasury yields, affects market dynamics.
Experts point out that equity markets are facing considerable risks based on economic indicators.
Current sentiment among investors indicates a potential shift in market dynamics.
What impact do rising Treasury yields have on equities?
Experts explain that rising yields mean higher borrowing costs, which can negatively impact earnings.
How does investor sentiment affect market trends?
Analysts indicate that pessimism in sentiment may lead to market sell-offs.
What do experts foresee for equity markets if trends persist?
Experts predict potential corrections based on current economic data.
What key strategies do experts recommend for investors?
Investors are encouraged to keep an eye on economic indicators and adjust portfolios as necessary.
Today, we're examining Jaime Diamond's insights regarding potential pressures in the bond market.
Diamond highlights critical factors that investors should monitor closely.
Jaime Diamond warns that instability in the bond market could have widespread economic consequences.
He notes that rising interest rates could challenge many bond investors significantly.
What does Jaime say about how rising interest rates affect bond values?
Jaime explains that as interest rates rise, the market value of bonds typically declines, which could mean losses for investors. Diamond cautions that bond market challenges could create instability worldwide, particularly affecting emerging nations reliant on foreign capital.
This highlights how interconnected global financial systems are. What strategies does Jaime suggest for navigating these risks?
Jaime recommends that investors reassess their portfolios, focusing on diversification and remaining alert to market dynamics.
What does Jaime foresee for investors if bond market issues arise?
Diamond believes investors should brace for greater volatility and adapt their strategies to protect against losses.
Jaime emphasizes that navigating the fluid conditions of the bond market calls for diligence from investors.
It's essential for investors to remain informed and prepared to adapt their strategies based on market developments.
Today, we're discussing insights from George Gammon about the stock market.
George provides analysis of current market conditions.
George Gammon explains that economic factors influence market conditions.
He stresses the importance of being aware of these changes.
What does George Gammon say about market fluctuations?
He points out that economic uncertainties drive these fluctuations.
George Gammon emphasizes the importance of monitoring economic indicators.
He believes these indicators will affect market trends.
What predictions does George Gammon have for the upcoming months?
He anticipates unexpected market shifts due to economic conditions.
George Gammon concludes that flexibility is key in these times.
He encourages diversification to manage risks.
In today's discussion, we delve into insights from Bert Dohmen, concerning market manipulation and gold's significance in investment strategies.
Dohmen points out that understanding market dynamics is essential in today's fluctuating economic landscape.
Bert Dohmen indicates that market shifts are commonly the result of manipulation, which may lead to costly consequences for investors.
He emphasizes the necessity for investors to remain informed to navigate these complexities. Dohmen suggests that investors should consider boosting their allocation to gold due to its historical performance during turbulent periods.
He adds that gold typically maintains or appreciates in value amidst financial disturbances. Dohmen discusses how geopolitical issues directly affect market stability.
Recognizing these risks equips investors to make better-informed portfolio decisions. Bert highlights the necessity of strategic asset allocation and diversification to mitigate financial risks.
He notes that investment strategies should be tailored to individual investor circumstances. What predictions does Bert have for the market ahead?
He foresees that ongoing manipulation and market pressures may drive up gold prices as investors seek security.
Bert concludes that understanding market manipulation is crucial for effective investing.
He recommends considering gold heavily in investment strategies as a hedge against market volatility.
Today, we're sharing insights from John Smith discussing market reversal signals for stocks, gold, and silver.
John sheds light on critical indicators that may signal significant market shifts.
John Smith indicates that key stock indices reveal signs of potential reversal.
Jane Doe notes that relevant economic indicators can provide deeper context for these movements.
What indicators is John focusing on when evaluating stocks?
John comments that volatility is crucial for both indices and precious metals.
This underscores the necessity for caution, as reversals can occur unexpectedly.
How do gold and silver respond to shifts in the market?
John remarks that gold's price is highly responsive to market conditions.
He adds that silver is being increasingly considered a hedge against persistent inflation.
What predictions does John Smith have for the next quarter?
John anticipates a probable correction in equities influenced by current indicators.
He also mentions that demand for precious metals could see an increase.
John advises investors to stay alert to correction signals.
Jane recommends a diversified approach, incorporating both equities and precious metals in investment portfolios.
Ultimately, comprehending these market signals is essential for making informed investment decisions. What an eye-opening discussion we've just had, don't you think?
Absolutely. Each guest offered such distinct perspectives on navigating this volatile economic landscape.
I was particularly intrigued by John Smith's analysis of market signals versus George Gammon's take on trends.
Right? And it's fascinating how all the experts agree on the importance of gold while differing on what market dynamics they see at play.
Exactly. Jaime Diamond's emphasis on bond market risks added another layer of depth.
Spot on. In these uncertain times, understanding these different viewpoints is crucial for smart investing.
If you found these valuable insights as enlightening as I have, please make sure to like and subscribe.
Your support keeps us bringing you more expert analyses that can help you navigate your investments.
Don't forget to tune in next time, as we'll explore how global events are shaping market trends even further. You definitely won't want to miss it.